Ladies and gentlemen, welcome back from lunch here in the room and also people watching the live stream. I hope you had a nice lunch, and now we have the difficulty of keeping everyone awake because after lunch it's the usual case. But hopefully we will be discussing about such topics that will wake you up. But let's see. Now, let's move to the third panel, the fit of digital euro within the European and Baltic ecosystem. And for this panel, as the moderator, I would like to call on stage CEO Pereira. She's the team leader working on digital euro at the European Commission. Please join us on the stage and take a seat. As panelists, I would like to first invite on stage the CEO of LHV Bank and the chairman of the Estonian Banking Association's Council, Kadri Kiisel. Second, from the European Payment Initiative Company, the chief member and strategy officer, Ludovic Francesconi. Third, a member of the European Economic and the Social Committee and Vice President of the Lithuanian Consumers Alliance, Kęstutis Kupšis. Fourth, from WISE, the Product Director leading UK and Europe and its infrastructure for payments globally, Lars Trunin. And the last panelist will be myself, so I will also sit in the panel. And give it over to CEO, please.
Thank you very much, Rainer. Good afternoon, ladies and gentlemen. I'm very pleased to be in Tallinn. And I would like to start by thanking the Central Bank of Estonia for doing me the honor of inviting me to this conference and to moderate this panel, which I hope will be interesting. This is a panel on the fitness of the digital euro in the European and Baltic ecosystem. The Baltic region is known for its highly modern and efficient digital payment solutions, where instant payments have already become the norm. I could experience this myself as a tourist over the weekend here, and even buying fruit at the market could be done without cash in my pockets, unlike, I must say, my own country. Users trust digital payment solutions, and in a word that cannot keep still, as Mr. Cipollone put it very well this morning, banks and other PSBs have no alternative than to invest and to keep innovating, to keep up the pace. The Baltic region is indeed home to many well-known European fintechs and unicorns that we use on almost a daily basis and that we are proud of in Europe, like Skype, Bolt, or Wise, to quote just a few. Yet, strong dependence from global players persists, as was abundantly highlighted today, despite this this thriving fintech scene. I could see myself in the terminals that Visa, MasterCard, Apple Pay feature prominently. In that context, there seems to be space for European alternatives, be them private or public, that align with these digital trends to reduce reliance on these global players. We certainly live in uncertain times, times at which payments can be weaponized, and that has led governments and central banks to seek autonomy through parallel infrastructures, such as the digital euro. And against this backdrop, the question arises, how do we introduce something really new and, dare I say, revolutionary, like the digital euro, into an environment that is already thriving, but also in a context where payment infrastructures have become instruments of geopolitical leverage? Today's discussion will take a practical and strategic angle. We will explore alignment with existing infrastructures, the challenges of integration, and the potential gains for the wider ecosystem. The issue is not only technological, but also deeply linked to Europe's economic strategy and sovereignty. The digital euro, if designed well, that's what we will be speaking about a lot in this panel, could become part of this broader strategy, a horizontal enabler that modernizes payments, supports competitiveness, and strengthens Europe's autonomy. So with this in mind, let's explore how can the digital euro coexist with and usefully complement the systems already in place while contributing to Europe's long-term competitiveness and also resilience. So today we have a very well-composed panel. I'm just sorry that the gender balance is not great, but nevertheless, I think that we will do a good job collectively. And we have in this panel users, representatives of users. We are all representatives of users, but we have someone here who is perhaps even more expert than us, representatives of the supervisors or overseers, and of course of the industry, which will have a key role in the delivery of this project. So I will ask next to the panelists to briefly introduce themselves before we proceed. As for me, I'm Pereira, and I lead the Digital Euro team at DG FISMA, so Financial Services, Financial Stability and Capital Markets Union of the European Commission. Like, dare I say, Obelix that fell into the magic potion. At an early stage of my career, I fell into the magic of payments, even when the topic was viewed as boring. I think today one can see from the many discussions around the digital euro that the topic is everything but boring. It is even somewhat controversial. But let me give the floor to my fellow panelists so that they can indeed briefly introduce themselves. And perhaps ladies first, I will give the floor to Kadri.
Thank you. I'm Kadri Kiisel. I'm the chairman of the management board of LHV Bank in Estonia. I've been in the banking industry for 15 years. Previously, no years. So basically, my banking career started in LHV. And also, I'm the chairman of the advisory of the Banking Association in Estonia. But I think that I would reflect myself as face of the customer today, because most of my time in banking sector, I've been in retail banking area. So basically, customer experience and everything that customer wants, how to create value for the customers. This is something that I deeply care about. So if we talk about digital era today, then I think that I can definitely reflect on the customer side. So what could be the value created for our region customers in this project? So thank you.
Thank you. Ludovic, please.
Good afternoon, everyone. So my name is Ludovic. So I'm at Epic Company, but you can just think about Wiro, which is the brand of our product. And I'm in Epic Company. I'm in charge of development and strategy. I am French, unlike my name says, but and I was previously working at the French domestic card scheme, Carte Bancaire, so almost 20 years in payments.
Yeah, hello everyone. What I want to say about myself, because in the morning I already introduced myself a little bit. I'm also working on digital euro heavily. I'm also sitting at a high-level task force developing a digital euro. So hopefully I have a nice overview what is the design, what we want to achieve, and how it may impact also the Estonian market.
Good afternoon, everyone. I'm Lars from Wise. I'm a product director there. Rainer already embellished the introduction with titles, but I thought I'd say a few words about Wise. For those of you who don't know, we try to help people move money around the world. Today, we move about 170 billion euros from one country to another every year. And most interestingly, I look after the payments infrastructure globally that makes basically money move from one point to another as quickly as possible. But in addition, perhaps what's relevant for this conversation is I sit on the board of an organization called Pay.UK. They're basically the equivalent of EBA clearing, but in the UK, they move about 10 trillion pounds of people's money between businesses and people, salaries, pensions, direct debits, etc. And there I represent the small banks and the fintechs in the UK community and have a good opportunity to compare what's happening there with what's happening here in Estonia, here in Europe, and globally overall.
Good afternoon, friends and colleagues. I'm Kęstutis Kupšys. I represent here civil society, a non-governmental, non-profit sector. And I'm part of the Lithuanian Consumers Alliance. We established this umbrella consumer organization back in 2012. Also, this LCA, the alliance, is part of the BEUC, the European Consumers Organization, that many of you definitely know. And also I serve for the 2020-2025 term as a member of the European Economic and Social Committee, which is advisory body to the European institutions. Glad to be here, and thank you for the invitation.
Thank you very much to all. And it is then time to deep dive into some of the topics that I will mention now. First, it will be about the fitness of the digital euro into this already crowded ecosystem and value added. Second, then we will turn to regulatory and operational considerations, and we will finish with a discussion on incentives and partnerships. I believe that the panel, as you may have seen, is ideal to discuss these topics. So, and on that vein, I cannot imagine a better way to start than to give the floor to Rainer, who first has played a key role in organizing this conference, of course, but who is also at the very heart of the policy making and regulation of the market in Estonia, who knows the market well. And I would like you, Rainer, to tell us about how the Central Bank of Estonia assesses the fitness of the digital euro into the Baltic region's digital infrastructure. What gap exactly is it intended to fill?
I will try to do it and not repeat everything that has been already said in the morning, because Veiko already started also that how our narrative has changed from the start of the road up until now. In Estonia, we have really good payment solutions. Digital payments are close to our heart, and we use them on a daily basis, and customers appreciate them a lot. But when I'm reflecting now about the gap which digital euro would fill, and now talking in the role of authority coordinating the continuity of vital payment services in Estonia in a crisis, we have learned that banks are investing a lot into resilience. Banks are also investing in backup solutions. But we have also understood that there is a limit to which extent banks can do those investments. And in the morning, we also were talking about the expectation of the society on the public sector and the central bank. So if banks' services are disrupted, then people expect an alternate solution. Yes, cash is currently available, but we also talked about the issue that the availability of cash, if bank services do not function, it may happen that people cannot withdraw cash either. And we have given the guidance that hold some cash with you, but if they don't, then they don't have anything. And also, just at the beginning of the month, we had also these disruptions in card payments in Estonia. And then I was reflecting, so how much harm does this disruption do? And I took the annual value of card payments at point of sale. And then if I divided it to 1 hour, it's 840,000 euros in Estonia only. Just imagine 1 hour disruption in the euro area. This is already hundreds and hundreds of million euros. So this is the impact on the economy, on the digital economy, because indeed in the physical stores people go and buy food, but how many services they will not use and what's the impact there on the businesses. And there they expect something in addition, and the gap that we are then filling in today's world is with the public service, which is the digital legal tender. We offer cash, but in the digital economy, we then offer a digital legal tender that would function when bank services do not. And we have put measures in place to make it happen. In addition, at the physical store, the offline, which we talked about, this is also something that actually the private sector cannot do, but the society would demand in times of crisis. We have to give assurance that digital payments can continue. I like the symbol that we have to be able to stand on our own feet, not rely on others. And this is why we are doing it. We cannot expect the banks to fill this gap. We have to do it ourselves. And but digital euro would not be only used for payments when bank services are disrupted. Digital euro has to be used on a daily basis as well. So this is where, in principle, digital euro also complements the bank services, enabling consumers in Estonia to pay also wherever in the euro area, and vice versa. Let's take Vero customers in France can come to Estonia, use their Vero app and pay in the supermarket, while digital euro is moving from the merchant to the merchant. So this is how digital euro will actually ensure the pan-European reach at the merchant side, because in the regulation this will be compulsory to accept by all merchants. And maybe one thing which is provides a little bit confusion in the market is what do we offer from the Eurosystem with the public rails and infrastructure, and what do we expect from the banks? We will offer the rails to move money, digital euro. We will also offer the payment app to which banks can connect their existing systems. Yes, banks have the option to develop the apps themselves, but they don't have to. Similarly to us printing money securely and ensuring security, we will also do the digital euro app. And private solutions can also offer the same to the banks, for instance, like Vero. With Vero in the future, I believe, and this is the expectation in the retail payment strategy of the Eurosystem, that all the pan-European solutions would also facilitate usage of digital euro as well. And I have understood that this is in the objectives nicely. So for the customers even, using then the Vero app for instant payments today, they don't need to start changing to the digital euro app. They could just continue using the Vero app. But the key issue in Estonia is that we don't have a national solution. And we have such a small market that there is no business case for building a national payment solution for payments at the point of interaction or point of sale in the shops. So I think that's the issue. And then for us, the digital euro would actually solve this. The digital euro will be done for the entire euro area, and we will just leverage on it and be able also to build our national backup solutions. just to ensure that digital payments can continue also in case of bank services outages and for daily payments. Thanks.
Thank you very much, Rainer. These were very interesting points on how this project can support also the private sector and the society as a whole. Because as you said, there's a limit to what banks can do, because sometimes there's no business case, and because you increasingly need redundancy and resilience, and therefore the digital euro could support all of these goals. But now turning to Kadri, we have heard a lot about the weight and, dare I say, the dominance of international card schemes in the European payments market. Do you think that the digital euro could shift somehow the balance of power with the international card schemes? And what would it take for banks to gain real leverage?
Mm-hmm. Thank you. I think that the digital euro scheme actually do have some kind of optimistic view if we talk about getting some kind of alternative for the non-European payment schemes. Nonetheless, it should be considered that the power shift only happens if commercial banks in Europe actually have the key role and motivation in doing that. So, for example, if we just build a scheme and there is a possibility for non-European big techs just to take over the customer base, then of course it won't happen. So because the motivation for the commercial banks should be very well defined in the whole scheme. So that would give some kind of first steps, for example, to understand if the power shift could happen. Without that, European banks are on board and understand what is their role, what is their motivation, is there stability, understanding how the new scheme will affect their everyday work, then if the understanding is not there and the liability is blurred in some cases, then I don't think that the power shift will happen.
So clearly a word of caution as to indeed the impact of the digital euro. We must get it right so that it complements existing payment solutions without crowding them out.
Yeah, exactly. And if I may add, then I don't think that it's reasonable to think that the digital euro will actually solve all the problems. In case of emergency, in case of instability, in case of resilience, in case in countries where basically maybe there are not so well-established digital payment schemes or payment solutions, for example, I think that the problem should be defined in narrower scope. What is the problem that we are trying to solve with the digital euro? Because we cannot solve everything. If we want to solve everything, then we probably will have just a very costly system that actually don't solve any of the issues. So that's my point of view. Yeah.
Thank you very much. Indeed, the digital euro cannot solve everything, but it can help to solve a few problems that we have. And we can also hear the voice of consumers in this regard. Consumers are used to fast and convenient means of payment. Do they really need another digital means of payment, such as the digital euro? And do they even understand actually the difference between the digital euro or public form of money and private money?
Yeah, thank you. So it was fascinating to listen to all the conversations this morning, and I was carefully listening to see if there is someone pronouncing that sacred phrase. And that sacred phrase was a tool in lobbying for the whole banking industry for the last few years. And probably many of you have heard it. The digital euro is a solution looking for a problem. And I think what Kadri just said a few moments ago was very close to that. But without this very clear formulation, this solution kind of looking for a problem was, I think, a very, let's say, powerful and indeed quite successful tool in shaping the digital euro architecture in the last 2-3 years. But definitely, we need some evidence to see if there is a problem, if we need this, besides the very abstract issue of private versus public money. So, my umbrella organization just published last week results of a representative survey, and that's 10,000 consumers in 10 countries. So that's a survey by BEUC, the European Consumer Organization. You can find it online. That's quite fresh paper. And actually, we asked the consumers. We also asked teens and adults to understand their preferences separately, to make still the representative picture of 10,000 people in Europe. What are the aspects they value most in digital payments? And what would they value as crucial features if a new digital form of payment was to be introduced. So it's not asking about digital euro, because digital euro is still in the preparation phase. You cannot ask about something which is not yet existent. But we tried to shape the question in a way that it's relevant for the people. So 3 most important aspects: secure and reliable payment means, easy to use, and very low or no fees. So security, ease to use, and no fees, very low fees. Because, next question is, why? Why would that be important? Because half of the consumers experienced difficulties, some difficulties, from technical errors to security concerns, lack of skills, and that's what half of people say out loud when they are asked about the existing digital payment solutions. And also, approximately 40% of people we asked said they sometimes help others to master the digital payments. I mean, this statistic is quite telling about the actual situation in the whole payments landscape. Still, 85% of people say they would like to have cash continuing as a means of payment. So 85% would still love to have cash. And now, on the basis of these survey results, we developed a set of recommendations. I think there is not so much surprising for you to hear, because that's an audience of deeply engaged in the topic professionals. So, of course, digital euro should be easy to use, secure, ensure strong fraud protection. The digital euro card should be offered free of charge. That's also coming from the results of that survey. And it should have also strong accessibility features. Now, there was a talk also this morning about how to ensure financial inclusion. And on that need of people to ensure inclusion, to ensure ease of use, I'm building my own vision, that essentially digital euro should be your right at birth. And I mean, we get used to cash from the first days of our life, when we start walking, when we start engaging in economic transactions with the world. Now, why digital euro should be somehow different? I would envisage that actually every European at birth immediately receives a digital euro wallet. Perhaps it's still, not operational, but it should be the birthright, with potentially some feature of getting, used to it with when you are really very young, in order to get kind of acquainted when you are then becoming more adult later in your life. So that's digital euro inclusion by default. Why would someone need to get through the KYC period when he or she is 12 years old or 10 years old? I mean, for me, this is a mystery. Why to get onboarded, you need to go through a barrier of banking sector, while actually you need to get access to public money immediately when you are born and when you are getting old enough to transact. So that would be huge added value. That would be indeed a vision of 100% inclusion. With an opt-out option, perhaps, but not something that you have to, in order to get digital euro, you need to become, onboarded. So, and with these features, with these recommendations, we also believe that we should offer some basic features free of charge, as the way we do now with cash. So there are more, and I encourage you to find the paper, to find the survey results, to go through it, to understand what people actually want. And that is let's say, my belief in a potentially secure and prosperous future for Europe, for European citizens. Yeah? So I would look at this not from the today's perspective, which is of course, entangled in a multiple issues related to diverse lobby pressures and interest intersections, But from the long-term perspective, what kind of life, what kind of economic vision we have in front of our eyes for the next 20, 30, 50 years.
Thank you very much. You've brought to this debate a very important dimension, which is indeed inclusion by default, which probably only a public means of payment can achieve, and also what the digital euro can achieve is to guarantee your right of access to central bank money, even in a digitalized economy, where cash can only serve some purposes. Now, turning again to industry representatives, I would like to give the floor to Ludovic, who indeed brings the project Wero to this panel, and which is a project that is very important also for our European sovereignty. And because it has the ambition to deliver a pan-European payment means, and the road to doing that is probably not very easy. So how can the digital euro be framed so that it is not actually competing with successful national or regional solutions such as Wero, but as a European public good that actually supports them? How can we get it right in that perspective?
So, just before answering your question, let me just quickly remind everybody what we are doing at EPI and Wero. So, first of all, it's an account-to-account payment solution. So, directly from the payer account to the beneficiary account. There's nothing in the middle. And it's based on instant payment, covering all use cases, P2P, e-commerce, point of sale, and also value-added services, with also a wallet approach. So wallet approach meaning that there will be in the Wero wallet, there is already in the Wero wallet, not only the Wero account-to-account payment, but also other payment means. Today, where we are live in 3 markets, so Germany, France, and Belgium, with P2P launching e-commerce next month in Germany, then Belgium. And next year, we will be covering 5 markets. So we will add Netherlands and Luxembourg. And those 5 markets are representing 75% of all the value of retail payments in the euro area. So this according to ECB statistics, which is already quite good, but not enough. And of course, we are not limiting ourselves to the euro area because the objective is to expand to other markets, in the end to cover the whole SEPA region. And we do that via 2 ways. The first way is expanding Wiro to new markets. We will announce certainly new markets very soon. Of course, Estonia could be one of them in the future, but we are not there yet. And we are also working on interoperability with other local solutions, so namely represented by EuroPA, the European Payment Alliance. I think you will hear in the next panel our friends from BISUM from Spain. And so the objective is to make sure that we can make Wiro interoperable with other solutions which are important in their markets to cater for cross-border payments inside the EU. So this being said, so for today we have 43 million users already, 43 million enrolled users in the 3 markets. And next year it will be even more because we will also migrate existing solutions in Netherlands with Ideal, which is more than 11 million users already, and also Peconic in Luxembourg. So this is Wiro today. Then what is important, answering your question, is that when you go to digital payments, you enter into a new competitive area, actually. Because today, I heard a lot this morning, yes, we will create the digital version of the Euro cash, but this is changing completely words. Because when you enter into the digital space, then you don't compete with other currencies. For example, in Europe, there is nobody paying in shops with dollar. We only pay with euro or local currencies. But then when you go to the digital space, your competitors are beginning to be Apple Pay, Google Pay, Samsung Pay, PayPal. So all American players or Asian players in the future as well, which will be much more challenging. And that's why this wallet area is really, really competitive today. So we are not competing against the same people. And then that's why we need to join forces. And so that's where we need to really be mindful of that. Because, for example, just taking an example, if you take contactless payments, NFC, today, which is the most used type of payments in shops, much more than QR code, then when you tap your phone on a payment terminal, there is only one wallet which is selected. Only one wallet, which is the one which is chosen by default by the user. And if you are not this wallet, you will never be used. So my message is to say, let's not create multiple wallets. Let's try to focus per market on one wallet champion for Europe. And let's make sure that we can integrate the different payment means in this wallet so that, for example, when you want to pay, as you said, Rainer, when you want to pay with your Wiro wallet, you will have the choice. So the consumer will have the choice to choose between account-to-account, cards, maybe, and digital euro in the future. And depending on what the merchant will accept, it will also filter the use of this wallet. So that would be, from our point of view, a smart approach.
Thank you very much for this perspective. It's not, as I said earlier, must not be an easy task to scale up to the whole EU. And in that regard, we've heard a lot today about how the digital euro can support this scaling up process. I would like also now to turn to Lars and explore another of the possible benefits of the digital euro in terms of, in particular, resilience. Do you think that the digital euro could provide an added layer of resilience and security in the payments ecosystem, even in a region that where trust in current digital solutions is already very high?
I think the short answer, someone earlier said yes, because you're distributing your eggs across many baskets, and the short answer is indeed yes. I think the more broader question, I really liked what Kadri touched upon earlier, is like what is the problem indeed that digital euro is solving? Is it resilience or is it something else? And if you really think about it, right? Let's picture 10 years from now, people are actually now using it. Okay, to solve for the problem of people actually using it, many of you are economists here, so we can think of supply and demand. Supply is pretty easy. The authorities in Europe can basically force the tech to be implemented and force the industry to pay for it or some of it as well. So getting either an API across data centers in Finland or the Alps or like whatever you want, like it's all doable. The tech exists, right? Even tamper-proof chips in your phone, like the tech exists. It's not a tech problem. It's the demand side that is a bit more interesting, because what is actually then the problem to solve? So it could be then resilience. But even if we've defined the problem to be resilience, that's not enough, okay? Because for it to really work, the clarity of the problem needs to be very high among the consumers themselves, among the users who are actually going to adopt and use the payment method. So I'll bring an example. So WISE is trying to solve, for example, the problem of hidden fees in exchange rates. Most banks, sorry if you're some of them, hide fees in the exchange rate today. Most people around the world still pay it without realizing it. A lot of people are aware of the problem. I mean, the problem is big. It's 150 billion euros of hidden fees paid by people like you and I every year, okay? The problem is very visible, measurable. Most people still haven't switched or tried an alternative to this, because they don't fully realize that there is an alternative and that there is really a problem. So companies like WISE need to spend a lot of effort trying to really make the problem visible, tangible for them, so that they would understand, okay, I need to do something, I need to change my behavior. Because we all know that, hey, there are too many cars out there, it's polluting the planet, it's wasting our time. But if I were to ask you, hey, please don't drive tomorrow, you're gonna be like, I don't know, like I gotta be there on time, And it's the same with payments. Unless people feel that there's a true frustration, they will not switch, resilient or not. And Evaldis, I think, made earlier a really, really good point, right? Part of the resilience game is that enough people start to actually use this. So, if we're now talking about resilience then again, the interesting scenario is that, okay, if digital euro exists for the purpose of resilience, let's ignore the other benefits for a moment, okay? Not only does it need to be agreed that this is the problem that we're solving, not only does the solution have to then cater towards resilience, i.e. it needs to work in Finland as well as in Portugal. It needs to work online as well as offline. It needs to work on a plane. It needs to work when there's an outage. Not only that, people using the payment methods need to realize the problem when it becomes useful, and that there is a solution that works when the problem arises. And someone earlier mentioned, hey, let's just throw in a day where normal payments don't work, right? So you do have to battle test it, because otherwise, unless you get that critical amount of usage, the moment when you truly need it, you don't know if it's actually gonna work or if people are gonna use it.
Well, this was a very, I think, rich discussion, and with many different perspectives. It is clear that the digital euro is not an answer to a single question. Perhaps if I would have to rank it in terms of the key reason for the digital euro, perhaps I would say, imagine a world where you would not at all have access to central bank money. Would that be a world that we would like, to only depend on private players for getting payment services and different shapes and forms? Isn't central bank money a way to unify, to contribute to the uniform, some uniformity? But of course, there are different answers to this. We've seen a bit of this diversity in this panel, and this is, I think, healthy. Now, perhaps we can explore further regulatory aspects, because there is regulation that is on the table. There's a Commission's proposal that is being debated in the Council and at the Parliament. We've heard from it this morning. And perhaps we can deep dive into some regulatory considerations. And perhaps I will turn again to the industry and ask Ludovic, how should the digital euro be integrated into today's payment infrastructures? And do you see it reshaping your business model in the EU? How do you see that coexistence?
Yeah, so I think from a regulatory perspective, it's important that as we enter into a brand new competitive space, which is the digital payment area, it's important that we have totally fair competition. So to make sure that all the players, even public players, have the same rules as private players to play on this market. So that's one consideration, I think, important, very important from the point of view of the industry. Another one is that maybe if we want to make sure that consumers have access and have more choice, also maybe because I think we are talking about a lot about the public tender on the merchant side, mandatory acceptance for merchants, but maybe also focusing on the consumer side, it would be interesting to think about what about mandating the banks to offer at European level, to offer at least one European digital solution to their consumers, to their customers. So then we also give more access to digital payments to the consumers, because it's true that in some regions there is only, let's say, international cards, and consumers that don't have any other alternative. So I'll try to I keep it short, so I will stop there.
Thank you very much. Well, yes, indeed, a level playing field is something that comes back on discussions with the co-legislators, and this is an important principle. Maybe the digital euro can also help the private solutions like Wero to be accepted at scale in the EU, because of indeed the open standards that will have that will indeed mean that the merchants will have to accept payment solutions that the merchants will have to accept the digital euro, and then can more easily accept payment solutions based on these common standards, and the scaling up effect. And I see that Kęstutis has probably some additional insights.
Exactly. I want to react. I need to react. Like in all this call for equal treatment, public versus private, it's a little bit weird to ask for this when it comes to basic people's needs. Essentially, what is the mandate, what is the obligation of all the European institutions or the Eurosystem institutions in Europe? It's to supply payment means to everyone, to make sure that economic engine runs without any troubles. Now, if you take private views into account, that's a completely different mandate and completely different, let's say, worldview of actually creating profits. And that brings an issue on the table. How do you ensure what is the agency of private actors to serve all 20 plus countries or all EU countries with a fast, secure, easy to use, consumer-friendly solution, right? So there is no agency actually for private sector to act, and that brings forward the public solution. For me, it's very clear that essentially it is a little bit weird to see that public sector might fall into a regulatory freeze because private sector asks for no action, please, because we want to develop private solutions.
Yeah, but it's not the same rule anymore. So just if I can just react. It's not the same rule anymore because in this case, the public sector, so the ECB in this case, will act as a provider of a solution, a retail solution for the market, so then competing with the banks.
What is the perspective from the supervisor/overseer on this debate?
And also the Eurosystem. It's the first thing to say, we are doing digital euro not to compete. We are doing it to complement, to strengthen existing solutions. It was said, or Kadri asked, what is the problem we are trying to solve? In different markets, the problems are different. Mm-hmm. We have to admit it. The levels of the market are different. And it's a European project. So we have to cater for the different problems and the needs. In Estonia, the problem is we don't have a solution at the point of interaction, a point of sale at the merchant side. And the problem is that if bank services are under cyber attacks or suffer technical glitches, people cannot pay digitally. That's the problem, and we're trying to solve it. Yes, true, people will need to use it on a daily basis so that digital euro can be used in such occasions. And we have to work on that, as Lars was explaining, that we need to work on that, how people start using it. But there it's also, I think, if we go to e-commerce, there are, sometimes you need to enroll into additional wallets or whatever. And I think people don't want to do it. They want only to have one wallet and use it everywhere. And then this is also what we are trying to achieve in the euro area. And it was said really nicely that don't crowd out existing private solutions. That's not the objective. We are not crowding out anyone. Also, the regulation provides the banks the option to use those private solutions if those private solutions also integrate with digital euro. That's why we are really openly discussing and engaging with the market, developing the rules so that private solutions could adjust themselves in case the digital legal tender comes, so that they can also provide digital legal tender and serve their, for instance, banks, so that the bank customers can use digital euro. And not only in those markets that they are existing today, but also in those markets where their solution is not present, but digital euro is accepted. And from that, also the providers and the banks themselves get also revenues from the merchant service charges. So you expand the market. So digital euro is not here to take away business from the banks. It is here, even I would say digital euro will bring new merchants, those which do not accept digital payments today because card payments seem too expensive. Because there will be a cap on the merchant service charge, but that charge will be reasonable. That charge will be better for the merchant, definitely. And that charge will be also in the compensation model distributed among the parties so that everyone gets compensated of their cost and also gets revenue at the end of the day. And all people and also merchants can rely on the digital legal tender also in cases where there are outages. And we cannot ask the private sector, the banks, to prepare themselves so that they have, I don't know, 2 or 3 different backup solutions readily available. This insurance is too costly. That's why the public sector, the network, needs to be providing these kinds of services, the digital legal tender. We do it with cash today. Tomorrow, in the digital age, where we are actually living, we need to do it with the digital euro as well. Because the example I gave you, 1 hour disruption of digital payments actually cuts lots of revenue, which we don't consider currently so seriously, I think. And actually, the merchants don't get anything from the acquiring banks or the card schemes in return. Merchants could actually say that, okay, I lost revenue, please give me a percentage. They are not. They need an alternative. Thanks.
Thank you very much, Rainer. I think these were the perfect closing remarks for this panel. There are 3 minutes and 30 seconds left, so I would like to perhaps give the floor for 1 question to keep the agenda, not to derail the agenda. If there is someone who would like to ask a question, you can do it now. Yes, please.
Marco Pachor was talking before as well. Maybe a question for Ludovic. What is the upside of interlinking? So what is the upside for the local solutions to interlink instead of just adopting the API solution as it is?
Well, some of these solutions have been there for quite a long time. There's also, an issue with a challenge, let's say, with branding. So when you are very well known, like a solution like Bisum in Spain is so well known from the Spanish people, it's in everyday language that it's difficult to go from one solution to another. It's not so simple. That's what we are doing in the Netherlands with Ideal. Ideal is in the top 10 brands overall in the Netherlands. It's very strong. 70% of e-commerce is going through Ideal. So we know it's a challenge to engage into this migration from one solution to another. But yeah, in the end, I strongly believe that we need to consolidate the European payment market, and we will certainly get there one way or another. But yeah, it's difficult because also from the consumer perspective, what we don't say maybe enough is that payments is really something personal. Personal finance and money is something really important for people, and you don't play with that so easily. So, habits are changing slowly, and it's also a matter of time.
Can I add something to this? I think we also mustn't forget that sometimes we have the risk of thinking too small, and the EU is not the entire world. It's that there's, the majority of people are outside the EU, and so whatever we build, one way or another, sooner or later, needs to work for the Japanese who are visiting Germany, for example, or for the Bulgarian who's ordering biltong from South Africa. Right? So whatever we end up building, initially we could be thinking about resilience and focusing on, against crazy neighbors wanting to come uninvited. But then down the line, ultimately, a payment is an exchange of value between 2 people, or two entities, if you will. And if we just close ourselves up to the rest of the world, that's too short-sighted. Ultimately, by the end of the day, like, payments just should move between people and businesses no matter where you are.
Well, thank you very much. 3 seconds left until the end of our panel, so I think it was actually perfect. It was very lively and candid, so thank you for that. And looking forward to the next panel.
Thank you.